Wrap up Friday. The European Union has given the green light to 5.2 billion of state aid for hydrogen development, expecting to boost the supply of hydrogen and renewable energy in Europe. That EU state funding will unlock billions in private investment for 29 companies that intend to run 35 green energy projects. The European Central Bank may seek to cut back on its funding of banks. It's getting increasingly expensive. In one hand, it makes the European Central Bank look incompetent among the bankers. On the other hand, policies that subsidize banks while the general population is struggling will probably go against a lot of public sentiment. Banks are in a unique position where, thanks to a 3-year loan from the European Central Bank, they have guaranteed return on their investment. The loan is called Target Longer Term Refinancing Operations, and the average interest the banks pay on it is lower than what they can earn by depositing the money in the central bank. UK government bonds prices lost their value drastically, and the pound hit a 37 years record low against the US dollar. It's highly likely that the Bank of England will have no choice but to increase the interest rates in the upcoming months in order to offset the inflationary impact of tax cuts and energy subsidies. Because of the falling output, Britain's economy is shrinking, technically in recession. Consumer price inflation has fallen to 9.9% from its 40 years high of 10.1%. A new crisis is on the way. Not only have people to deal with the cost of living crisis, but soon they will have to deal with the cost of working crisis as well. The cost of doing business is on the rise, and businesses are feeling the hit. It has become a concern for many business owners who believe that the high costs of doing business threatens their ability to stay afloat. Businesses are worried about the cost of working crisis that makes it difficult for them to be profitable.